Welcome back to our channel. Can CSR donations be claimed under Section 80G? Donations under Corporate Social Responsibility be claimed under Section 80G of Income Tax Act. In this video, we are discussing on Income Tax Appellate Tribunal ruling, Mumbai, in the matter of ACC Pharma Technologies Private Limited versus PCIT. It is pronounced on 1st July 2025. This case clarifies an important issue. Can corporate social responsibility CSR donations be claimed under Section 80G? It is also examined the scope of Section 263 revisional powers of the Principal Commissioner of Income Tax Act, Principal Commissioner of Income Tax PCIT. We'll see the legal background. CSR under Companies Act 2013, Section 135 mandates certain companies to spend at least 2% of their average net profits on CSR. However, the law is silent on whether such spending qualifies for tax deductions. This is silent. So we'll go to Income Tax Act, Section 37, subsection 1, general deduction for business expenditure. Explanation 2, inserted by Finance Act 2014, CSR expenses are deemed not to be incurred for business, hence disallowed under Section 37, subsection 1. This is what Income Tax Act, Section 37. We'll go to Section 80G. 80G allows deduction from gross total income for certain donations made to eligible institutions. It is part of Chapter 6A, which operates independently from Chapter 4D, that is business income. We'll see the case. ACC Pharma Technologies, the assessee made a donation 24,20,000 to a registered charitable entity, Access Foundation. They treated as CSR under Section 135 of Companies Act 2013. Suo motu disallowed the amount under Section 37(1) in computation of business income. Simultaneously claimed deduction under Section 80G. AO assessing officer allowed the claim after examining a tax audit report and return. PCIT invoked Section 263, alleging that CSR expenses are mandatory and hence not voluntary. AO's assessment was erroneous and prejudicial to the revenue. So PCIT's order and grounds under Section 263, PCIT argued that mandatory expenses cannot be considered as a donations for 80G. And AO failed to make adequate inquiry into the allowability under Section 80G. So order is erroneous insofar as it is prejudicial to the interest of the revenue. This is what PCIT argued. Then assessee's argument before ITAT was, the company argued CSR is a mandatory. Section 135 does not mandate recipient or modality of the spend. So donation was made voluntarily to an eligible 80G entity. Section 80G does not prescribe that donation must be voluntary. Section 80G does not prescribe that donation must be voluntary. So relied on CBDT Circular 1 of 2015, that MCA FAQ Circular 1 of 2016, and ITAT precedents like Sharda Carpicam Limited, Albo Dax, and Intergold. Key CBDT Circular and MCA clarifications. If you see CBDT Circular number 1 of 2015, CSR expenses disallowed under Section 37(1), but can be allowed under Section 30 to 36 and other sections like Section 80G if conditions are satisfied. And go to MCA Circular 1 of 2016, FAQ number 6, no specific tax exemption for CSR. However, donation to PM Relief Fund and Rural Development, etc., are still eligible under the Income Tax Act. Now we see the legal analysis by ITAT Mumbai. Legal analysis by ITAT Mumbai. It says AO's action not erroneous. The AO had examined tax computation, tax audit report, and allowed claim knowingly. ATG operates independently. CSR disallowance under section 37 subsection 1 does not preclude claim under section 80G. No requirement under 80G that donation must be voluntary. There is no requirement under 80G that donation must be voluntary. Only specific exclusions under 80G are for Swachh Bharat Kosh and Clean Ganga Fund, not blanket bar on all CSR. Tribunal emphasized that different chapters have different operational domains. Chapter 6A versus Chapter 4D. And reliance on precedents. In the case, Sharada Chem Limited, ITA number 6163, Mumbai 2024, CSR donation to registered trust allowed under 80G. This is a precedent. Another precedent, Alubound Ducks India Private Limited, ITA number 3663 of Mumbai of 2023, reaffirmed allowability under section 80G, even if classified as a CSR. Another precedent, Interpol India Private Limited versus PCIT, ITA number 4400, Mumbai 2023. PCIT cannot invoke section 263 if AO has made informed decision and no illegality exists. So these are all precedents taken into consideration. And ITAT final ruling and ratio decision held that ITAT held that AO's order was well reasoned and not prejudicial. PCIT's differing view does not justify revision. CSR donations, if made to eligible 80G entities, can qualify for deduction under 80G. So, class the section 263 order, restored AO's original assessment order. So, the implications in this judgment, it reinforces that CSR expenditure can be deductible under section 80G, subject to fulfillment of its own conditions. Section 263 cannot be used as a backdoor to reassess legal interpretations made by AOs. Encourages more clarity for corporates on CSR tax treatment. We have two channels, RR Corporates and RR Legal Talks. Please do subscribe, hit the bell icon so that you will not miss any of the latest videos. Thank you.